Okay, Q&A. You can ask any questions you want.
Including about Richard's
It's Chatham House rules, I think, is what they call it, right? Oh, you have a question back there.
Back here. Hey, guys.
Literally cannot see you.
I was listening to Rosenberg today. He actually says he thinks the 10-year will be at 2.5 in 12 months.
Suck on that, Keith.
Yeah, Keith. No. My question was, if we assume central banks are more reactionary, then wouldn't it make more sense that they would be swift and fast with rate cuts as opposed to something systematic and organized?
He said, given that central bankers are reactionary, which I agree with, do you think that their rate cuts will be swift and fast? As soon as they do change their direction, they'll do it quickly.
I think it really depends on what they're reacting to. I think if growth is just off a little bit, I think they'll just do 25 or maybe just talk dovish. But if they have to cut because growth is it's going off that slippery slope, I think they'll be really aggressive with it because they've already shown they can be aggressive. For the first time in the history of the Bank of Canada, and that's not their culture. That's not the way they usually operate. But now they have a taste of it, and I think they know what the position potentially could look like. So again, if it's just a mild experience, there'll be a mild monetary experience. If it's severe, yeah, they can go. They almost went negative back in 2020.
Well, Japan was negative forever, and Switzerland was negative for a long time. Europe was negative.
So again, you just have to be prepared, depending on the situation.
Are you of the view I look at a Rosenberg and he's like, okay, if he's calling for 300 basis points, I mean, are you of the opinion that has to be to get 300 basis points, you almost have to have some sort of financial event that is happening? We're holy shit,
If it's a fast 300, yeah, there's something going on. If it's 20, if they're just bleeding it 25 out every second meeting and they do it for 3 years or whatever. And
that seems unlikely.
I think that's not a big deal, right? Because remember the Fed raised rates. They went from 0 to what?
5.
2.25.
Oh, sorry.
But back in 2016 to 18, every second meeting they went up by 25, and the world couldn't stand it. The emerging markets were down on their knees. Europe was stop. You got to give it up because you got to do a gradual pace. I don't think it's going to be a gradual pace. I think it's either we stay flat and everything will be okay and all this, it doesn't matter. Or I think something severe happens and then we'll get that.
So my view is differentiated. I think we're going to stay flat because I think the U.S. is just stronger than people sort of want it to be, me included, who got that call wrong last year. But I also think we keep ignoring that inflation, and I don't mean just headline inflation or core or whatever stupid thing people tweet or pin on their thing. I'm talking about sort of the kind of more esoteric the Atlanta Fed sticky inflation or the median CPI or one of Canada's 3 preferred measures of core CPI. You've got the central distribution of these key inflation measures is still above target, well above target. And so from the Fed's perspective, unemployment rate is 3%, 3.5%, and inflation is 4%. Why would they cut? And so I think we have to keep that in mind when you think about these cuts. But we'll see what happens. Anyway.
Next.
Okay, I have a quick question around, when you talk about immigration, and that could be a hindering factor to the economy maybe, and have you considered thinking about decentralization instead of centralization, what you see in the greater Horseshoe area, which kind of drives almost the 30% of Canadian economy, and the housing price is probably $800,000-$900,000 on average, versus compared to the rest of the Canada?
So are you saying, so when you're thinking about immigration, do you think about decentralizing that? The fact that everybody comes to one place? Yeah, totally. That would, but I think, and Canada has a history of that. I mean, Canada has original sin, and we have a sordid history. We get it. But the point is, in the past, we've definitely said to people, if you've ever been to Winnipeg, everybody's blonde-haired and blue-eyed. Those people came from Ukraine during one of the famines that they've had. They've had many famines in Ukraine. And so we've been specific about planting people in different parts of Canada. I think that's absolutely one of the things. Now, I'm pretty sure that's against the Constitution. There's loads of rules. I'm sure we have people better placed to answer that question, but that seems like a reasonable thing to do. One of the things, I was in Austin, which is a really great place to go. And one of the things I think Canada lacks in general is that second tier city, or even third tier city. And I don't know what our governments can do about that, but to just encourage people to go to a Ajax.
I mean, I think
or,
Anyone here from Ajax?
no,
Yeah.
I mean, I'm joking, but the point remains, right? Like, there's New York, Los Angeles, Chicago, blah, 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 but there's like dozens of these smaller cities where you can go and live well and make a good living and have a house.
So that's also where, like, I think we've talked about it on the show before, which is like all the charts. I mean, I do like, I'm not trying to rationalize like the prices in Toronto and Vancouver. Like, they're nuts. Like, we can all agree that. But like, when you see, like, especially, I've done presentations for, some American guys and stuff, and they always say, what's going on with Canadian housing? These charts are crazy. And they put like the chart of like Canadian house prices next to US house prices. And I have to like remind people that like literally 70% of like Canada's HPI home price index is Toronto and Vancouver. Because that's where just like everybody goes. It's like housing is plenty affordable in Alberta and Manitoba, Saskatchewan.
Sorry, where?
Like, it's affordable. Like, it's quite affordable. But like, you go to Vancouver and Toronto, it's like egregious. So like, imagine if the U.S. house price index was just like, show us a chart of like New York and Seattle.
Yeah, that's
Like,
very
it's
fair.
kind of like what you have. And so it's like I said, it's 70% of the index is just those two cities. And because all the immigration, a lot of it does tend to flow into where are there jobs, where there's economic opportunity, and most of it is in the GTA.
I could go on, but I know we should move.
I've heard this now for 3 days straight, so...
Hello.
Yeah.
This is more of a Steve question, but Rich is still my favorite.
Ouch.
So in my general friend group, and also I suspect in this room, there are a lot of mid-20-somethings who are probably still living with their parents, who are putting away 60, 70, 80% of every paycheck to save for a down payment, accumulating enormous amounts of dry powder. Do you think there are any sort of long-term implications for that in backstopping potential falling house prices, tail effects on the economy as these people have basically self-selected out of retail purchases, vacations, investments, and so on, in service of building up this nest egg to go all in on a mortgage that they'll be paying off until the day they die?
Yeah. I mean, I think the one thing I will say, and like, again, I'm not trying, like, it's interesting, like, the one thing that I see, and I know there's, our housing panel is here, like, I'm sure they'll probably tell you the same thing, and like, the crazy thing is, like, in Vancouver, and I'm sure Toronto is the same, is people that are entering the housing market, they're not buying, like, based on their income. Like, I just worked with 2 clients in the last, like, couple months. Like, they got $1 million each. Here you go. I want you to get into the housing market. Oh, you live, I want the grandkids to be close. I don't want you to leave Vancouver and go to Saskatoon. So take $500,000 because my house, I bought it for $85,000 in 1978 and now it's worth 3.8. Like, just take the $500,000. It's just like your front on your inheritance. So they're just gifting that money earlier. And so that's kind of what is largely, I think, keeping the housing market afloat. And so how do you like put that into like a model and quantify it? And like, and that's a sad reality because, again, if your parents aren't on the housing ladder and they weren't like, just blindly buying a house 35 years ago, you are at a significant disadvantage. And like, even if you're a high paying professional making, $100,000, $200,000 a year, it's going to be hard for you to access the housing market.
Hi, this is a key question for Rich. I'm wondering, is there anything Canada could do in terms of easy fixes or low-hanging fruit for us to narrow the productivity and GDP per capita gap with the United States?
Fucking hell. I don't think there are easy fixes. I think all of the answers are hard and boring, and no one wants hard and boring. So here are some hard and boring answers that hopefully I think our research and development spending as a percent of GDP is horrific. And I think spending time and money thinking about how to bring that up is one easy way. it's 1.5 or 1.6% of GDP. That's absolutely abysmal. I think the other thing to do is lean into what we have a shitload of, and that is resources. And people don't like that because resources are gross and sticky and yucky. But that's, I think, for example, Canada has the same amount of refining throughput that we did in 1990. Refining energy into products such as natural gas and other stuff, to me, is another, so.
So you don't agree with Mr. Guilbeault?
He and I have philosophical differences, starting with nuclear power, I would say. Anyway.
Thank you very much. This is a question for Rich. You mentioned about the spending on GDP for R&D. I made a dumb decision, and now I'm in the middle of getting my permanent head damage. And
A permanent what?
permanent head damage, a PhD. Yeah, that's right. I really feel the ping because we reach out to a lot of companies and asking them to collaborate with universities and labs and to do research, and we're getting a lot of no's. And compared to my awesome classmates who all fleeted Canada to US, and they're getting a lot of funding for their research activities. So my question is going to be, how can we encourage more companies to collaborate with the universities and higher education kind of institutes, as well as just getting more research and R&D up compared to our neighbor?
Again, hard, boring. I think Canada, one of the things that really hurts our productivity growth is Canada is saddled by oligopolies. We have oligopolies in the energy sector, banking, telecoms, which ask me about that later. We have air travel. We have oligopolies and one more. What's the other one? Oh yeah, grocery stores. So we have in each of those sectors, we have maximum 6, minimum 3, 3 to 10 maybe companies that dominate 85 or 99% of market share in the case of telecom. There is no reason any of these companies would ever reinvent anything at any time ever. They generate huge ROEs. So when you compare telecoms from Canada to Australia, their ROEs are twice as much. They have no incentive to offer you, sir, a fund on how they can improve their telephony experience, whatever. And so one way that you can encourage them to invest in our research and development is to expose them to global competition, basically. And I think that would be one way. Now, do I think that's ever going to happen? No. I mean, but yeah, that's...
We got, two more questions?
Hey, nice to see you guys again. By the way, Keith, Stanley Druckenmiller does agree that interest rates might be at 7% if Trump gets reelected. My question is, what does it look on the other side of this? Will we have prosperity? Seems like you guys are pretty pessimistic.
What does it look like on the other side? So I have some dark views on where things might go. Yeah.
Rich owns like an acreage in the forest in like Montreal somewhere. You're already prepared.
Building a bunker. Yeah. No, I'm an optimist. I'm positive about Canada, but you're negative, so go. Way more fun than negative.
I'm a realist.
Whatever.
So the other side, I think we're going to go for a sovereign debt crisis. I think that's exactly where we're headed. I think central bank digital currencies are being created to address that when it happens. See, I'm rolling, right? Really fast. The other side, it doesn't matter right now what it's going to look like, but it's the path or the journey or the Aerosmith to get there. And as that path goes, I think I think the U.S. dollar just does this until they're the last ones, to have their day, and then it just goes splat. And what the other side looks like, again, I don't know. I don't really care at this point. I just know that I don't think you can prepare for what's on the other side we got to get through there first. So I just don't think I don't think we can continue where we are right now. The what?
No.
I think once this develops, I think central banks, including Bank of Canada, are going to run in and they're going to do so much QE to bail out the bond market. So that means then risk has to be expressed somewhere. So it'll be expressed in the currency world.
So
Then that's just going to create even more, stress in everything.
So
But that's my view. Like the CBDC thing we talk about.
which I mean, to an asset perspective, though, if that's your perspective, if you're going through a sovereign debt crisis, you probably want to own hard, tangible assets.
And any real asset.
Realistically, not levered to the
But if we have a
to the
sovereign
gills.
debt crisis, because say the bond market, it goes to crap. So you have to look at it, who owns the bonds? Okay, banks own the bonds. That's their
Pension
regulatory
funds.
capital. Pension funds own it.
Bank of Canada owns
30
bonds.
Bank of Canada. Yeah. but what would happen, again, it won't work out this way. And no one say, Keith said this is going to happen. I'm just saying this is where it could go. But it's not that hard. I mean, if I'm in charge of this is where we're going. I would do, if I'm the Bank of Canada, I'll do QE. I buy up every single federal bond that's out there. And all of a sudden, I have it all, and I'm exchanging. Then I wouldn't do the CBDC because I don't agree with that. I think there's another way that governments can run it. I think you could do a debt for equity swap of some sort. Because, like people talk about Canada and all the assets we have, the natural resources. So instead of holding a bond that's going to pay you 2, 3, 5, or whatever percent, you own a share of the assets and you're getting a royalty payment forever. There's no maturity date or anything. But that breaks the system.
Well, that's when
No one wants to break the
Christopher
system.
Freeland mandates the institutions to hold more government bonds.
It's bullshit. It's never going to happen. I have a different view. I think the thing we're just not talking about at all is that there's a huge imbalance between who owns assets and their age and who doesn't, and what we own, which is our labor. And that price is going to clear. And so what I mean to say is baby boomers, there's a lot of them, and they're going to die soon, and they're rich. And there's millennials and Gen X, and, well, Zoomers don't work, so whatever. But, and we're poor, but we have labor. And the way to square that circle is a wealth transfer. And that wealth transfer, in my view, will come through higher wages and inflation. Structurally higher inflation and higher wages. But the thing is, there you go.
Rich and I have great conversations.
Yeah.
I think socialism is dying in the West.
But it is, but that's what inflation.
Yeah, I think we're just not prepared for how it's going to look. I don't have an answer for it, but you could see it. I mean, the political pendulum is now swinging. I mean, it was very far left everywhere in the West. It's going to slingshot to the other side. And is that going to be better? We don't know, but it's going to be different than what we have now. But what's the definition? What is this, socialism? It ends when you run out of other people's money. Something like that, right?
And we're
there.
We're
We
running
ran
out of
money.
people. We're running out of other people's money.
Yeah.
Yeah, there's another optimistic angle. Sorry, really quickly, just productivity growth. We don't know what AI will do. We don't know what all this capex will do. I mean, everyone's really negative all the time, but we're still here. The 80s happened. There was like the 70s, there was oil embargo. I mean, there was lots of really horrible things that have happened, and humans have still survived.
Boomer, you got to check out ChatGPT.
The 80s were awesome, by the way.
One last
that a wrap?
question, and we'll wrap
Is
it
that a
up.
wrap?
Is that a wrap?
One more. We'll do one more.
Did you say wrap?
We have, because,
Hello, I think I can speak for everyone when I can say that I feel very fortunate to have found this podcast over the course of the pandemic. My girlfriend bought the tickets for me. She didn't want to come, but either
Life
way,
material right
its
there.
question
I
is
like
for
that.
Rich because I'm trying to get her.
man.
Yeah, I'm trying to get her involved in the podcast, and she's been watching an awful lot more football with me lately. And I'm wondering if you can maybe slide into Taylor Swift's DMs. If you did that, I think you could get a lot more
man.
viewership that way.
She is many levels ahead of me. So
Don't sell yourself short.
No, I'm cute enough. I just don't have the balance sheet. So there you go.
your girlfriend sounds great. Just keep her away from Rich. You'll be good.
Thank you, by the way. That was very sweet of you. Thank you.
Yeah, thanks for the support, and yeah, we'll wrap it up there. But guys, yeah, we'll hang out for a little bit if you want to grab a drink. I think the bar's still open, and we're gonna hang out here for another half an hour. Come say hi and.